Here at Super Return Infrastructure, we're delighted to welcome Luigi Pettinicchio, co-founder and CEO of Asper Investment Management. Welcome, Luigi.
Thank you, Dorothy.
Luigi, why are heat networks the next big thing in energy transition?
Right, so consider this. Heating and cooling in Europe account for about 50% of our energy demand, which also means 50% of our carbon emissions. But if you compare heating with power, heat received much less investments over the last couple of decades, so there is a big opportunity there. And what we're seeing is that they are rising fast on the agenda of governments and also the private sector. And we've seen quite a few high-profile transactions over the last couple of years, and also a big push to build new networks in some of the most, I would say, active markets in Europe.
And how do investors see the risk-return profile versus other renewable power?
This is really interesting. So, first at the high level, right? An established, built heat network is an infrastructure asset. You have you're producing an essential, you're giving an essential service. You have a long asset life. Your boiler can last anywhere between 15, 25 years. Your grid is actually pretty much an indefinite asset life. You have long-term contracts, both on the supply and also on the fuel. And ultimately, that is an infra asset. However, what you have is also an interesting, more private equity-like approach when you're building a new network. You typically, if you compare with power, you will have lower commodity risk because you don't have the exposure to power prices. Your operations are potentially more complex, they are actually more resource intensive, but you also have more opportunities for value creation. So in sum, I think the risk return profile is at least complementary if it's not actually accretive to a renewable portfolio into an infrastructure portfolio.
And what are some of the growth drivers going forward?
Right, so I think right now the biggest growth driver for new networks is really decarbonization. So building a heat network is the cheapest way to actually get rid of your carbon emissions and reaching your carbon targets. But there are a couple of other drivers which I think are really interesting. One is actually IT and technology. It was one in the panels earlier, it was mentioned, the new technology, smart software, big data allows for much smarter and more efficient networks, which also means lower cost and also more customer uptake. And finally, I think also energy efficiency is really important because the moment you have very efficient buildings, that means that you can build, without getting too technical, lower temperature networks, which also allows integrating different sources and actually makes these networks potentially much larger and more profitable. And
in the future, where do you see market trends going?
Right, so I think what we're seeing is right now, most networks in Western Europe are called the third generation networks. They're in Scandinavia and they're high temperature. I think the real trend is going to be towards these lower temperature networks with more integration of IT and also more integration of power. So not just CHPs, but for example, the integration of heat storage, power storage, potentially renewable power integrated with heat networks. And I think what we will be seeing is district heating will become an obsolete term. And I think we're going to be talking about smart hybrid energy networks in a few years from now.
Very interesting. Thank you so much. It's been a pleasure having you, Luigi.
Likewise. Thank you.